In 2008, a Wells Fargo loan officer admitted they called subprime loans ghetto loans and referred to black borrowers as mud people. This wasn't just racism, it was a calculated strategy that made con artists and predatory lenders billions of dollars. Today, we're exposing how racism has been weaponized as a tool for exploitation, and more importantly, how you can protect yourself. I'm going to show you the dark history of scams that specifically targeted black communities, the modern schemes still using these tactics today, and the exact knowledge you need to protect yourself and build real wealth. Let's get into it. First, I'll advise that you like and subscribe to this channel so that you don't miss out on future informative releases. This channel is created to help to share this to as many people as you can. Now that you've done that, I'll continue. To understand why certain communities became targets, we need to go back to when systemic racism literally locked black Americans out of traditional financial institutions. During segregation, most banks refused to serve black customers. And when they did, they offered worse terms, higher interest rates, and fewer services. This exclusion created a massive vulnerability. Con artists saw an opportunity. They created fake banks and financial institutions that claimed to serve the black community. These scammers would collect deposits, issue fake loans, and then disappear overnight with people's life savings. One of the most devastating scams happened during the Great Migration, when millions of black Americans moved north seeking better opportunities. Con artists would sell them land and property that either didn't exist, was worthless swampland, or that the scammer didn't even own. Families would save for years, pay everything they had for a piece of the American dream, and arrive to find nothing. No house, no land, just empty promises. And because they were already marginalized, there was little legal recourse. The scammers knew this and exploited it ruthlessly. Fast forward to the 2000s. The scam evolved, but the targeting remained the same. During the subprime mortgage crisis, studies showed that black borrowers were 30% more likely to receive subprime loans than white borrowers with identical credit scores and income levels. Banks deliberately steered black homeowners into predatory loans, with hidden fees, balloon payments, and adjustable rates designed to fail. When the housing market crashed, black families lost over 50% of their collective wealth. Meanwhile, the executives who created these schemes walked away with millions in bonuses. You might think these tactics are ancient history, but they're alive and well today. They've just gotten more sophisticated. Let's talk about affinity fraud. This is when scammers infiltrate a community by pretending to be one of them, using shared identity to build trust. A scammer might join a church, attend community events, speak the language, and present themselves as a successful entrepreneur. They'll show off luxury cars and designer clothes, claiming they made it through a special investment opportunity. Then they'll offer to bring others along for a price. Multi-level marketing schemes have specifically targeted black communities with promises of financial independence and entrepreneurship. They use powerful rhetoric about economic empowerment and building generational wealth. But the statistics tell a different story. 99% of people who join MLMs lose money. Cryptocurrency scams have also found a home here. Fake coins with names designed to appeal to black identity, influencers paid to promote pump and dump schemes, and always the same promise. Get in now, get rich quick, don't miss out. The scammers know exactly what they're doing. They exploit the very real economic disparities created by systemic racism, the legitimate desire for financial security, and the distrust of traditional institutions that history has given people every reason to have. Now, here's the knowledge that protects you. These are the red flags that appear in almost every scam, whether it's 1920 or 2025. First, pressure to act immediately. If someone says, "This opportunity ends tonight," or "You need to decide now," walk away. Second, guaranteed returns. In legitimate investing, there's always risk. If someone promises you'll definitely make money, they're lying. The stock market goes up and down. Real estate can lose value. Anyone claiming otherwise is running a scam. Third, requests for upfront payments or fees before you see any benefit. Real investment opportunities don't require you to pay to participate. If you need to send money via wire transfer, gift cards, or cryptocurrency before you can start making money, it's a scam, every single time. Fourth, lack of documentation or resistance to questions. Legitimate businesses have licenses, registrations, and paperwork. They welcome questions. Scammers get defensive when you ask for proof, tell you to just trust them, or claim the opportunity is too complex to explain. Here's how to verify legitimacy. For investment opportunities, check the SEC's website. They have a free database of registered investment advisors. For business opportunities, check your state's Secretary of State office. For anyone claiming to be a financial professional, verify their licenses through FINRA. If something seems off, trust that instinct. Google the person's name plus the word scam. Check the Better Business Bureau. Look for reviews. Real businesses have a trail. Scammers try to stay invisible until they have your money. Now, let's talk about building actual wealth without scams. First, understand that legitimate wealth building is slow and boring. That's not exciting for YouTube, but it's the truth. Index funds that track the stock market have historically returned about 10% annually over long periods. A 401k through your employer, especially with company matching, is literally free money. If your employer matches 4% and you're not contributing, you're leaving thousands of dollars on the table every year. This compounds over decades into hundreds of thousands. Building credit properly opens doors. Pay bills on time. Keep credit utilization under 30%. Don't open too many accounts at once. A good credit score saves you tens of thousands in lower interest rates over your lifetime, on mortgages, car loans, and more. If you want to start a business, there are legitimate resources. The Small Business Administration, SBA, offers free counseling, low-interest loans, and guidance. Community Development Financial Institutions, CDFIs, specifically serve underserved communities with fair terms. These are real institutions, not scams. Financial education is free. Your local library has books and often free courses. YouTube has legitimate financial advisors teaching real principles. Look for creators who don't promise quick riches, who show you data, who encourage you to start small and build slowly. When seeking a financial advisor, look for fiduciaries. That's a legal term meaning they're required to put your interests first. Fee-only advisors are paid by you, not by commissions on products they sell. This aligns their incentives with your success. Racism created economic disparities, and con artists have exploited those disparities for over a century. But knowledge is protection. When you can spot the red flags, when you understand how real wealth is built, you break the cycle. You protect yourself, your family, and your community. Share this information. Talk about it in your community. The best weapon against these scams is an educated population that knows what to look for. If this video helped you, hit subscribe so you don't miss future content. Drop a comment about your experiences or questions. Stay safe out there, and remember, if it sounds too good to be true, it always is.